Action.
Good afternoon. I'm here with Brad Mewes from the Mewes Group CFOs, the newest sponsor for the California Auto Body Association. His organization provides tax solutions for small businesses, body shops in particular. So, Brad, why don't you tell me a bit about yourself and how you got started in this business?
Hey, thanks, Ryan. Appreciate it, and super excited to be a corporate sponsor here. So, I grew up in the body shop business. So my family still owns a body shop in Southern California. I spent the better part of nearly a decade running that business, and like a lot of folks in the industry, kind of fell into it because my family was in it. And tried more times than I could count to leave the industry, and then realized after I got an MBA in 2012 that hey, I actually know a lot of people in the auto body business, and there's a huge need here, so I might as well build a business around that. So that's how I got started in the business.
Great. Why don't you tell us a bit about the ERTC, or the Employee Retention Tax Credit?
Yeah, totally. So you remember last year, back in March, when like the economy literally like turned off overnight?
I do, definitely.
Like, yeah, it was a pretty scary time. So I was running a small outsourced CFO business. We're doing SBA loan brokerage, and mergers and acquisitions of small businesses, and and the economy shuts off overnight, and the only aid package that was out there was what was called the EIDL. And the EIDL, probably a lot of members were able to take advantage of the EIDL. But when it first came out, it was like this 25-page long application, and so really bureaucratic. And so a banker I knew who saw what I was doing, because I was talking on LinkedIn about it and talking to clients about it, I was like, wow, that's really cool, what you do and how quickly you pivoted. You should be part of this working group I'm on with government financing of small businesses. I'm like, oh, cool, yeah, this is before the PPP, before the CARES Act, before all that stuff. And I get on this call, and it's an actual White House working group phone call. This operator comes on the phone, and it's like, I'm operator 2463725. This call is off the record. We're going to turn it over to our host, Nicole Fraser, special assistant to the president. Take it away, Nicole. And I was like, whoa, like, where am I? Like, how do I get on this call? And on the call was the White House, the Department of Labor, the Treasury Department, and the SBA. And they were all basically saying, listen, like, we're completely overwhelmed, and we need the private sector's help to, we have money, but we have no way to get it to small businesses. So that was my aha moment. That's when I realized, wow, if the government doesn't know what's going on, just imagine how every small business owner is going to be feeling in the U.S. And I think we all experience it over the forthcoming year. So, it's a little bit of a circuitous introduction, but what happened was we started doing a ton of work with small businesses, and particularly auto body shops in and around the PPP. But what nobody knew about which was called this employee retention tax credit. And so this employee retention tax credit is kind of like the PPP round two. It's always been around since the beginning of the pandemic, but because of some recent changes in law, it became available to effectively everybody now. And so the retention tax credit is basically anywhere from $5,000 to $7,000 per employee that the government will give you if your business was impacted by COVID.
It's my understanding that there's three main qualifiers in order to receive the ERTC.
Yeah. So there's like 100-page rule book, like that the IRS published, that kind of sets all the rules for this. But if you take that and you distill it down, there's three main qualifiers. And what we found is a lot of folks are, they're going to their CPAs and saying, hey, how does this work? And then the CPAs say, oh, well, you have to have you have to be shut down, or you have to have a revenue reduction. And so which isn't completely accurate. So there's three main qualifiers, and what it is if you have any one of the three, you qualify. And so the first one would be a revenue reduction, and the percentage depends on the time period. But basically, if you have a 20% reduction in sales in your revenue, this quarter versus the same quarter in 2019, then you'll qualify there. But that's not the only qualifier. And so we've worked with a lot of businesses that have actually seen their sales increase, but they meet the second qualifier. And the second qualifier is what we call the partial shutdown. And this is where a lot, especially in California in particular, where a lot of auto body shops qualify. And that's because even though you're an essential business, when you read the code and you read through all the details of the code, what the code says is that even if all of your business operations were allowed to continue, but your business was more than nominally affected by compliance with COVID mandates, then you qualify. And so, a lot of business owners don't realize that there's a lot of work that they've done, a lot of things that changed, a lot of the things that they changed about how they are allowed to be open, how they're allowed to do business. And oftentimes you qualify on this partial shutdown provision. And the
Great.
third main qualifier is what we call the supply chain disruption. And so this has been a huge issue in the body shop industry because we've seen across the entire industry, the OEMs were shut down in the beginning of the pandemic, and we've seen huge supply chain disruption. And so OEMs have been unable to provide critical parts and supplies to their dealers, and the dealers have been able to deliver those critical parts and supplies to the body shops. And so if your suppliers were forced to shut down to comply with government mandates, which many of the OEMs were, then you qualify there as well.
What are some of the common mistakes or assumptions people have about the ERTC?
Yeah, good question. Yeah, I think probably the most common one is, and this is where we see a lot of our clients come to us. They go to their accountant, they say, "Hey, what is the ERTC thing?" And their accountant's income tax person. And and these are payroll tax credits. And so they're very different kind of regimes, different departments, different forms, different filings. And their accountant goes, I don't know, let me look into it, which is kind of like if you hear your doctor say, I don't know, let me look into it, I'll get back to you. It's normally not what you want to hear from your doctor. Same holds true, on the accountant side. So, I think probably the first mistake people make is just not kind of understand the holistic, the whole picture here. So, which is also part of the reason why we're seeing a lot of income. So a lot of accountants start referring this work to us. Um, but I think the second one is we see a lot of folks who kind of say, well, yeah, I think I qualify, and they file a form and they kind of rush through, but they don't put any of the supporting documentation around it. And so when you read through the rule book, probably the most common mistake we see people make is they kind of rush through the calculations and they say, yeah, I qualify, whatever. But the rule book has a number of items that you have to have. You have to calculate covered periods, included employees, excluded employees, qualified wages, non-qualified wages, break it down by employee, by quarter, by period. If you're relying on a partial shutdown, you have to have copies of your government mandates and exactly tie that back to how that actually impacted your business. You can't just say, well, yeah, COVID was tough. And so kind of having that supporting documentation is really important. And I think that's probably the third one that we see a lot of kind of like unforced errors happen is really how all the different aid packages overlap, right? So maybe you had PPP, maybe you had people out on COVID paid COVID leave, so that there's all these different ways that you have all these different rules you have to follow, and so not being aware of those, creates a lot of unforced errors as well. So a lot of complexity, but that's what makes it fun. That's what I really enjoy doing what I'm doing because of all those different moving parts.
Absolutely. If a CAA shop decides to work with you, what kind of guarantees can you give them?
Yeah, that's a really good question. So a lot of what I do in my own business, I've modeled around the lessons I've learned running my family's business, and so one of the things we have in my business, and nobody else that I know does this in my line of work, which I've always kind of scratched my head, but I have what I call the auto body lifetime guarantee. And so we put literally a lifetime guarantee on all the work that we do. So if there's ever any question, ever an audit, ever a review, whatever it may be, not only do we 100% guarantee the work that we do, we guarantee it for life as well. And we just think that's the right thing to do, right? And that's part of the lesson I learned, working in my dad's shop is everything that we did there, we had a lifetime guarantee. And we did that because we knew we were going to do the good job, and that was how we kind of put our money where our mouth was. And so we made our promise to our customers, like, listen, like we're going to take care of you, and we're going to stick by you no matter what. And so that's exactly what we do in our business here.
Great. Brad, we really appreciate your time. We really look forward to working with you. For those watching, you can find a link to Brad's company near the video where you download it. So Brad, thanks again. Any last words?
Yeah, I think for most people who are probably listening to this, probably fall in you might fall in like one of three categories, right? Some people are going to say, hey Brad, thanks for the information. This is good. I got this covered. And if that's the case, and you feel good on this, like congratulations. Like this stuff's complex, so the fact that you were able to figure this out on your own, like that's awesome. Um, for those of you who might either not completely understand everything or just kind of want a little more like education on it, you know please reach out to me. I have a link. It's called zoombrad.com. There's also a link on the CEA, website as well. Schedule time with me because, happy to chat with you through this and kind of help understand how this works. And that's part of our guarantee to all the members is like we got to make you got to make sure this works for you. And if it works, great. Let's dive into it more. And then kind of the last person, like some of you might be listening to this, be like, oh wow, like we need to talk. Same thing. Go to that link on the CA website, schedule time with me, and I'll be there personally on that call, and we'll walk through exactly what you need to do to take advantage of these pretty meaningful tax credits. So yeah.
Great. Thanks again, Brad.
Thanks, Ryan. Talk soon.
Thank you.